please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good afternoon. This is Your Stocks. I'm Bangla Malu. With me is Sumaira Abdi. Sumaira, looks like a good afternoon. We're virtually closer to the high point of the day. And mid-cap index, that one's doing fairly well. 3 stocks in the green for 1 in the red. Can't complain much.
Well, no complaints actually this afternoon. And also the fact that it's almost the end of the earnings season. So that, I suppose, will also bring some bit of relief. But yeah, looking good for the market. Pretty much close to the highs. And the Nifty, in fact, heading nearer to that 10,700 mark. For stories, let's just look at some of the other stocks which are in focus actually. On the Just Dial is one stock actually we might want to check out. It's now up about 18% and that is when it's off of the day's high. OBC is another one. That stock has gained a bit more, so that stock is now up, I think, about pretty much at the day's high, up 9% and Reliance Naval Relcom, of course, that pack also continues.
Absolutely, but individual stocks, they're buzzing, and how we have Interglobe Aviation and Jet Airways, they were a buzz since morning and now they've extended their gains, so Interglobe Aviation is at the high point of the day. But another stock which is buzzing on the back of a good set of numbers is Lemon Tree Hotels. The company's margins were strong while higher other income boosted the company's net profit as well. Remember, this is the company which recently listed. The issue price was 56 rupees. Within 2 weeks of listing, the stock went up all the way up to 91 rupees and now a little off its 52-week high, trading closer to that 70 rupees mark. We have Patanjali Keswani, the CMD of Lemon Tree Hotels, joining us now to discuss the company's fourth quarter earnings. Thanks a lot, Mr. Keswani, for joining in. If we take a look at your occupancy in the fourth quarter, that one has declined a little bit. If you take a look at it year on year, from 79% to 77.2%. Is that on the back of increased capacity? And going forward, what's your projection for occupancy in FY19?
Well, if you look at our performance for the last 5 years, it is our occupancy, especially in the last 3 years, which have been pretty poor years for the hotel industry. We've always been over 75%. As it happened, we opened, I think, another 420 rooms last year in FY18, and obviously these hotels being new took time to stabilize, which is why our occupancy on a blended basis came down by about 1%. However, prices went up by 13, so overall RevPAR gains were 12%, which is the revenue per room.
Okay, could you also tell us, this FY18 is when you've turned profitable. Is this a trend likely to continue? What's the outlook now for FY19?
Well, the reason, I think in the hotel industry, what you have to look at is not PAT as much as cash profit, which is PAT plus depreciation. Because keep in mind that 4% of revenue deployed is depreciation. And most of that in our business, or at least in the case of Lemon Tree Hotels, is simply cash profit. Because we only use about 5% of the depreciation for upgrade of asset. So the rest of it really flows into our free cash flows. Now, from that perspective, we were cash profit negative only for 2 years, and in total it was a marginal sum of about 20 crores. As far as PAT in and of itself goes, yes, we've turned around. We were, I think, minus 5 crores, and now we are 15 crores PAT positive. We were minus 5 crores in FY17. But the critical index, the critical metric you should look at is cash profit, which was 46 crores in FY17, and it is now 67 crores in FY18, which is about, I think, a little under a 50% growth.
Mr. Keswani,
and going forward, to answer your question.
Go ahead.
Well, to go forward, the reason it is cash, we are PAT positive also now, is because prices have increased, and some of our early hotels, which we opened in the last 3 years, they've all become profitable now, and going forward we see no reason why it should not continue. Because the demand supply cycle is changing in the hotel industry.
Right, Mr. Keswani, we understand the demand cycle changing in the hotel industry, but your occupancies, they're already at 75% plus, like you've been saying. So going forward with increasing occupancy, do you think there is more in terms of operating leverage to play out, given your margins have been, what, 27, 28% over the last few years? What are the levers for margin growth is what we're trying to understand. Going forward, can you see your margins be around that 30, 31% mark?
Well, our margins have already crossed that, because if you look at Q4, and if you look at our margin expansion, it was a little under 10%. So it was, I think, 970 BPS.
Right.
And for the year, for same hotels, because you have to exclude the hotels we opened last year, the margin expansion was, in Q4 was 620 BPS. So we have already crossed 31%, and going forward, it will just keep, I assume, keep increasing.
Okay,
because it's all operating leverage, as you know. For every rupee increase in price, it's 97, 98 paisa goes to the bottom line.
Okay. You still have a debt of about 1,000 odd crores, right? Could you give us a sense of what's the repayment plan now?
Well, I don't want to give a forward-looking statement, but let me put it simply as follows. That if you look at our operating debt right now, about 800 crores is on our existing hotels, and 211 odd crores is for the new hotels we are building, which we will be opening this year, which is another 900 rooms. So totally we are opening about 1,700 rooms this year, of which 900 are owned by us, which will also stabilize presumably in this very positive environment now. And we expect that within the next 5 years, we will be debt-free.
All right, you
Total
said
debt will not exceed 1,300 crores at
okay,
peak.
we'll be debt-free in the next 5 years. Mr. Keswani, before we let you go, you said 13% was the price hike that you had taken this year. What have you earmarked for FY19?
At least that.
At least 13%. All right. Thanks a lot for joining in and giving us all those details.
You're watching Midcap Radar. Actually, I just want to check one stock, and that is Jet Airways. So aviation stocks have been on the up and up actually from the get-go. And Jet Airways has added another 2-3%, in just the last few minutes. Look at that sharp spike. It's sitting at the day's high. I wonder if the other aviation stocks as well, Interglobe actually also is now at the day's high. And if we can just pull up SpiceJet, I wonder if that completes the trio. So aviation stocks looking good this afternoon. But let's focus back on earnings. Insecticides India just came out with numbers just a short while back. So it looks actually like there's an operational improvement this time around. So margins have expanded to about 11% in terms of profit. Also, they've seen about a 5% rise. Rajesh Agarwal, the MD and CEO of the company, now joins us on the telephone line with more details. Mr. Agarwal, good afternoon to you, sir. First up, if you can give us a sense of the volume and price breakup for the quarter, and now what's the outlook for FY19?
If we look at the last quarter, actually, last quarter is generally a smaller quarter for us. And in the previous year, the sales has not.
Mr. Agarwal?
Now is to work on the new generation molecules. And we are trying to bring them through our own R&D centers and our collaboration partners. You will find a big change has come in the profit margins, actually. And last year, our profit broadly, if we look at EBITDA, it has gone up.
I think we've got him on a bad line. What we'll try to do...
If we look at our... Yeah.
Mr. Agarwal, I think it's a scratchy line, so we'll try to get in some more details from you. You said your profit margins have improved, but a large part of that also is on account of lower finance costs. They've come down by about 40% this quarter. So if you could tell us whether you've reduced your debt by that amount as well, what does it stand at right now?
Yes, the debt is, I don't have the exact number, but yes, the debts have come down a lot actually, and even the working capital limits, our utilization is small. So overall, the financial expenses have also come down. I was talking about EBITDA 14%, but if we look at the PAT margins, there you see a growth of about 40% plus. 41% is the growth in the PAT margin from 60 crores or 59.4 crores to be precise in 17. By 18, it is 84 crores actually. We look at the PAT margins. So here, yes, we have the advantage of the financial cost, which is reduced by about 6 crores odd. I don't have the exact number in front of me. But that has been the advantage. But primarily, it is due to the change in the product mix because we are introducing new generation molecules since last 2-3 years. Actually, it has been our endeavor. And in the next year again, we are going to bring more than half a dozen new agrochemicals. Actually, we are launching more than half a dozen brands in the market. So the entire focus is that we get the sales growth from these new brands actually, and we keep on increasing the margins in our product.
Right, go ahead, sir.
Yeah. So the strategy is that some of the generic molecules where we have to work at very small margins actually, we'll be exiting some of those molecules and try to bring the new generation products actually to the farmer.
Okay, so exactly this new launches is what I wanted to ask you about. How much might they incrementally add, and do we expect the launch in the first half of FY19?
Yes, there will be a launch of about 5-6 products in the first, like if I talk about the first half, then first half may see about 7-8 products actually, out of which about 6 products will be coming in the first quarter itself. Though the contribution in the first quarter may not be that big because they are going to come practically majorly in the month of June. So only 1 month sale we'll get. But yes, they will start contributing from this quarter itself. About 5 to 6 products we expect to launch in June.
All right. Thanks a lot, Mr. Agarwal, for joining us and giving us all those details. We will keep an eye out on that. Meanwhile, we're getting a lot of numbers. Vascon Engineering is the one that should come up for you. That one's spiking on the back of posting a bottom line profit. But remember, they had posted an EBITDA loss. So could be some case of an exceptional or maybe tax credit. So we'll keep an eye out on Vascon. The stock has seemed to like the fact that they've posted a net profit. So it's up 10%. Another one is GNA Axles. That one reported a strong growth on the net profit front, close to around 29%. And that stock too has moved to the high point of the day with a 6% gain. Remember, this is the company that gets a fair amount of its orders and revenue from the US, North America, Class 8 trucks as well. So which is something that perhaps may have played out for GNA Axles. We'll keep an eye out on that. Close to 30% growth on the net profit. We'll try to get in some revenue growth as well. But let's move on with the show. Joining us today to answer all your stock queries, we have Gaurang Shah, Prakash Gaba, both of them who will be giving you advice on what your questions are. So thanks a lot, gentlemen, for joining in. First up, we have Shreya Jain, writing to us from Mumbai, holds 100 shares of Mandhana Retail at 181 rupees a piece. For the last 1.5 years, long-term investor wants to know whether to hold or sell. Gaurang, a view on Mandhana Retail. The person's losing a fair amount of money. Do you think this is the right place to play brands or maybe shift somewhere else?
Well, good afternoon, Mangalam, and to all of you all. Unfortunately, we don't have a specific buy-sell hold coverage on Mandhana, so it's going to be difficult for me to comment specifically on this one. I apologize for that.
Right, Prakash, what about you?
I think it's a clear-cut sell. It looks like the structure is weak. I don't think it's going up. Any up move that you get, exit is the one.
All right, exit the stock. That remains the clear view from our technical analyst. But up next, we have Shubham Agarwal, who writes to us from Bareilly. He says he holds 600 shares of Syntex. He's bought it at 24 rupees about 4 months ago. He's a short-term investor and wants to know what he should do at this point in time. So he's making about a 4,000 rupees in terms of loss. Prakash, for a short-term investor, are there any better levels on the horizon?
Short term, I would say the Syntex is still looking weak. I mean, you're getting a chance. Of course, you're losing money. I would exit because even if you get up move maybe to around 1750, it's trading at 16 rupee up. Just don't worry about rupee. Exit.
10,700 is here for the Nifty. We're again at the high point of the day. Along with that, we have 400 runs on the Nifty Bank, and that one's led higher by not only private sector banks, we have a lot of public sector banks as well. So they should come up for you. The PSU Bank Index is sitting with a gain of 3.5%. So name any PSU bank, the likes of Punjab National Bank, Bank of Baroda. If you take a look at Indian Bank as well as OBC and Syndicate Bank, all of them are up anywhere between 7 to 11, 12%. And Sumera was talking about aviation stocks. SpiceJet, that one's locked in upper circuit with a gain of 20%. So we'll keep an eye out on individual stocks. They are buzzing and how. Ravinder Singh, he calls us from New Delhi with a query. Has investments in Shrey Infra, Ravinder?
Hello.
Yep, Ravinder, go ahead.
Sir, I'm holding 1,800 share of Shrey Infra at the rate of 87 or 86. So I'd like to know the outcome of the...
87 rupees you said, right?
Yeah, right.
I think we'll have to fix that graphic. It said 860 rupees, 87 rupees. Go ahead, Ravinder.
Yeah. So I'm holding, I want to hold it for the long term. So what is the outlook for this?
Okay, Gaurang, any view on Shrey Infra from the long-term perspective? He's losing about 10, 11 rupees per share right now.
So Mangalam, no specific coverage again, but this has been one of the underperformers for a very long time.
Mm-hmm.
And I think the sector in which the company is associated with financing of infrastructure-related projects, etc. Our view is that you are better off, switching on to a well-diversified NBFC. And in that, I would like to possibly recommend L&T Finance and Holding. I think the stock corrected post the numbers trading at, I think, 160, 165, thereabouts. They remain positive over here and possibility of recovering losses in case if you make a switch to L&T Finance and stay invested for maybe about 2.5 years.
All right, Prakash, you have a call on it?
Technically, there we can see some kind of an upside in the stock, and I would say that in case he wants to hold it, just hold it, exit closer to around the cost, and then switch. But it can go towards cost, that's certain.
Okay, that's the word on Shrey Infra. Up next, as Jay Kumar has written to us from Tamil Nadu, he holds 11,000 shares of PC Jeweler, which he bought at 360 rupees in just the last 2 months. That is this price. He's a long-term investor and wants to know whether to hold or to sell. Gaurang, let me come to you on this. I mean, this is a stock that has really destroyed a lot of wealth of investors. And just this morning, we spoke with the management who seemed to take this point on board. And he says, at least as far as this Indus promoter transfer is concerned, he doesn't see much more of it in the future, etc. For a person who's lost a lot of money on this stock, what would the call now be?
So, Simara, well, I believe this should be a short-term trade become long-term because of the knock that one would have had. If that is not the case and if the investor has bought it on someone's, I think, advice, it's a disaster. And you're right, despite the fact that the management has come number of times on various news channels and tried to clarify that stand, I don't think the stock is seeing any kind of respite in terms of relief. Point number one. Point number two, they also announced the buyback. But again, the buyback is going to be only, proportionately in terms of the number of shares that get absorbed. No specific coverage on PC, but just a word of advice to all the viewers. Stay away from such stocks wherein there is a lot of negative news flow. On the fundamental side, if I have to look at gems and jewelry, Titan Company is something that we are positive on from a long-term point of view. There.
Absolutely, Gaurang. Point well taken. PC Jewelers has been a fairly volatile stock and Titan has created wealth. So Gaurang recommends Titan from the long term. S. Jaykumar is losing about 20 lakh rupees. Our commiserations with him.